A penalty for paying off your mortgage? That sounds insane, right? What bank wouldn't want you to pay off your mortgage early? They get their money early and you aren't at risk of default for them any longer. Well, there is a reason. It's called interest. Banks are in the business to make money. So when you pay off your mortgage early, you eat into that interest. In other words, you cost the bank money if you pay your mortgage off early. Fortunately, there are ways around the prepayment penalty. Plus, not every mortgage has one, especially since the Dodd-Frank Act changed things a little bit. In this video, we'll discuss what a prepayment penalty is and how to find out if you'll be charged one and if it makes sense for you to pay off your mortgage early at all. Hey everyone, this is Andy Hill from Marriage, Kids, and Money, a channel dedicated to helping you strengthen your family tree and live financially free. If you like what you hear today, please consider giving me the YouTube triple thanks. That's hitting the like button, subscribing to the channel, and then commenting down below. Thanks so much. Okay, what is a prepayment penalty? A prepayment penalty is a charge some lenders require if you pay off your mortgage before a specified date. Most penalties are for the first 3 years of your loan, but every lender is different. The prepayment penalty prevents borrowers from paying off all or a large part of their mortgage. Lenders would prefer you to pay the loan back slowly and steadily because this accrues more interest, aka profit for the bank. The Dodd-Frank Act of 2010, the new mortgage regulation guidelines, that makes it more difficult for lenders to charge prepayment penalties. Lenders that charge prepayment penalties cannot make them for more than 3 years. Lenders cannot charge more than 2% in the first 2 years and more than 1% in year 3. It makes sense, really. Banks want to make money. It's how they stay in the business of loaning money to buy homes. But what's the difference if you pay off your loan in 2 years versus making regular payments? Well, lenders take a significant risk when you first borrow money from them. Let's say you put down 5% on a $300,000 home. The bank lends you $285,000 and you invest just $15,000 of it. The bank is on the losing end of the deal, right? Normally, they'd need to charge a hefty interest rate to compensate for this risk. What if you stop making payments after just 6 months? You'll have barely touched the principal at this point, which leaves the bank with a major loss. With a prepayment penalty, they give you a much more affordable interest rate and ensure they still make money on the loan. If you paid the loan off early, you may have to pay a penalty for the interest they'd lose. You're probably wondering at this point, does every payment incur a penalty to pay off your mortgage early? In other words, if you pay an extra $200 towards your principal for a couple of months, will you pay a prepayment penalty? Fortunately, the answer is no. Most lenders allow you to pay as much as 20% extra periodically without penalty. They aren't worried if you pay a few extra $100 towards your principal. While it knocks your principal balance down a little faster, it only reduces your term by a couple of years. Lenders lose the most when you refinance after a year or two or sell the home right away. This is when the prepayment penalties are the most prevalent. How much do lenders charge for a prepayment penalty, you might be asking? Well, like interest rates and closing costs, lenders charge different amounts for the prepayment penalty. Here are some of the models they might follow. Model number 1, pay a certain number of months in interest. Lenders may choose a certain number of months of interest they want you to pay if you pay the loan off early. For example, they might charge 12 months of interest if you pay your loan off in the first year, 6 months if you pay it off in the second year, and 3 months if you pay it off in the third year. And then model 2, pay a percentage of the loan amount. Lenders may also choose to charge you a percentage of your loan amount if you pay the loan off early. For example, they may charge 2 to 3% of the loan amount if you pay it off within the specified time. Let's talk about how to find out if your mortgage has a prepayment penalty. This is a good question. The easiest way to tell if your mortgage has a prepayment penalty is to look on page 1 of the loan estimate. Every lender must send you a loan estimate within 3 business days of applying for the loan. On page 1, you'll see a section that states prepayment penalty, and then yes or no. If it's yes, it will also state how much you'll pay if you pay the loan off early. The bigger question is, if there is a penalty for paying off your mortgage early, does it make sense to do so? Well, let's consider these questions. Question 1, can you get a better return on your investment elsewhere? Before paying off your mortgage early, consider where else you could invest the funds. Depending on your time horizon for investing, you might find that you make more investing in your home than other investment options. So do the math and the research to be sure. Don't just assume your money is best spent on your mortgage. Make sure of it, because once you pay off your mortgage, there's no turning back unless you sell the home. Question 2, do you have an emergency fund? When you pay off your mortgage early, you tie up your money in your home. You can't easily liquidate it because you have to sell the home to get the money. This could take months or longer depending on the market, and you never want to be forced into needing to sell your home to get money. If you don't have an emergency fund for 3 to 6 months of expenses, we wouldn't suggest paying off your mortgage early. You may even want to have more money than that saved. For example, do you have enough to save, give, invest, vacation, or do other things you care about? Tying up all your money in your home may not be all it's cracked up to be if you can't do what you want with your money. Question 3, will you feel more at peace paying off your mortgage? Some people hate having debt hanging over their heads. That is definitely me. If you lose sleep at night thinking about the interest you pay on your mortgage, you might feel better off without it. On the flip side, having your money tied up in your home might bug you more rather than paying it off slowly. Think about what you value the most and handle your mortgage that way. If paying it off all in one lump sum worries you, consider other options like biweekly payments that might help you pay it off gradually over time. If you've decided the penalty for paying off your mortgage early is worth it, or your mortgage doesn't have a prepayment penalty, here are the steps to pay off your mortgage early. Make sure you have an emergency fund. This is a really important one. Before tying up your money in your home, make sure you have money set aside. For example, emergency funds cover your expenses in extreme circumstances when you can't work. Also, consider having money set aside for home repairs, car repairs, and medical expenses. Don't just get by. Have enough money set aside to get you through any situation without a financial struggle to pay off your loan. Also, max out your retirement accounts. Don't ignore the need to save for retirement. If you haven't saved, do that before paying off your mortgage. If you have already started your retirement accounts, max out how much you contribute. The more you contribute early on, the more time it has to grow and support you during retirement. Once you achieve Coast Fire, or you're on that path, then consider paying off your mortgage early. Also, pay off high interest debt. If you have high interest debt, pay it off before paying off your mortgage. Consumer debt interest rates are much higher than the interest you'll save paying off your mortgage. Don't carry high interest debt in exchange for paying off your mortgage early. You'll waste more money doing it that way. If you decide all the stars align and you want to pay off your mortgage, I've got plenty of videos on this channel to help you make that happen. In the end, paying off your mortgage might seem like the holy grail of personal finance, right? You can proudly say you own your home free and clear. I know I love saying that personally. There are bragging rights in paying off your mortgage early, but watch for the penalty for paying off your mortgage early. That's something you want to know. Admittedly, they aren't as common as they used to be before the housing crisis, but they still do exist. Even if you don't have a penalty for paying off your mortgage early, though, it doesn't always make financial sense to do so. Evaluate your financial situation and ensure you're in a position to tie up your money in your home, remembering it could be a long time before you can access the funds should you have an emergency. Well, enough from our side, everyone. We want to hear from you. Is there a penalty for paying off your mortgage early? Is this something you've looked into on your mortgage payoff journey? Please let us know in the comments below. This is Andy Hill from Marriage, Kids, and Money, signing off. Carpe diem.